Hi, good morning and welcome to today's morning report with me, Richard Perry, market analyst at Hantech Markets for Thursday the 8th of May. The handover that we've had into the European session has been fairly positive actually. Quite a few factors that have happened in the past 24 hours that have turned investor sentiment far more into the bullish category. Starting off with Janet Yellen's rhetoric yesterday, which was fairly dovish, fairly supportive of the market, suggesting that the US still needed the US economy still needed support. There was job market slack, below average inflation, and also citing a housing market slowdown potential. So it suggested that she was still on the rather a dovish tack, and the markets took that fairly positively. Equity indices certainly turned round on the back of that. Equity indices also pulled higher on the news that Vladimir Putin was going to be withdrawing troops from the Russian side of the border, and also that he was prepared to meet with regional leaders as well to discuss issues that could potentially diffuse the tensions that were happening in eastern Ukraine. Overnight, also, we've had Australian unemployment coming in lower than expected. That certainly boosted the Aussie dollar, and also Chinese trade data that unexpectedly came in positively. Exports up, imports up, coming out after last month's significant decline. So the improvement in the general trade data for China is positive for risk appetite. For certainly the commodity currencies, but also generally for global GDP as well. So that was a nice little positive that investors got into today. Asian markets pulled higher, and European markets are also trading higher at the open as well. So we're getting some nice moves in the early hours of trading. In terms of currencies, there's been a slight move back away from the dollar once more after yesterday's slight dollar rally. We've seen, I'll just show you quickly the VIX index. That is, as I said, slightly lower yesterday, so reflecting of the improved risk sentiment. Moving on to the dollar index, that's zoomed in a little bit more than I have been showing you, but that just shows it's ticked down slightly early on today. But that seems to be reflective of the fact that euro's stronger, and also sterling stronger as well, both of those coming in front of the key central bank meetings that are announced today. Neither central bank are expected to move on rates, but certainly the currencies are strong in front of the announcement. Also, we've got jobless claims, which I'll show you here quickly, expected to come in at 325,000, slightly better than the 344 jump that we saw last week. So we need to get that trend nicely back on track, having had a significant jump in the last couple of weeks. So it needs to be slightly lower. As I said, the key things that investors will be looking out for today will certainly be the Draghi press conference. As I said, ECB is unlikely to really move on rates this month, having seen the inflation rate tick up to 0.7%. However, the value of the euro is fairly strong at the moment, and it seems to be every time it pushes above $1.39, Draghi will try and talk it lower, and that seems to be the case. That the market is expecting that today, some sort of rhetoric from Draghi that could pull the euro, or attempt to pull the euro lower. How effective that will be ultimately remains to be seen, because I think it's getting to the stage at which traders need action rather than just talk. So we'll see what the reaction of that will be at 1:30 this afternoon. My chart of the day, I'm going to be looking at, focuses on the euro, but also euro yen, a couple of currencies that have been benefiting with the dollar weakness in recent times. But if you look at the chart, we've had this big uptrend over the past year. This is a 13-month uptrend, but focusing closer in, we'll see it's actually sort of completely and utterly flattened off in the last few days or few weeks. These momentum indicators are pretty much bang on flat. There's nothing really to go on too much, and there's a slight corrective element to the stochastics, but even then in the last couple of days, we've seen that begin to turn up again around neutral. So there's not especially a great deal to go on. On the daily chart, you would also say that this uptrend that's been in place for the last 13 months is beginning to now break down. So that's more to the fact that it's pushing sideways rather than coming off lower. But seems to be the case at the moment. Intraday, we seem to be trading tightly within this in this trading band between 140.94 and 142.46, and that has been the case for the past 3 weeks or so. Hardly any real movement there. The moving averages are all pretty much flat. Momentum indicators, as with the daily chart, the hourly momentum indicators are fairly flat as well, so no real movement there. You could argue that you got the 142.01 and the 141.11 as the two levels that you need to be looking at immediately, but it is increasingly range bound and flattening off. Now, Draghi could have an impact on this chart today. This is one of the reasons why I'm talking about it. Today, Draghi could certainly try and talk the euro lower, and if that is to be the case, then we could see a retest of these lows, 141.11 and 140.94. At the moment, the euro seems to be a little bit stronger, moving in towards the meeting, but no real gain on the day, just 3-4 pips up for the euro on the day. But we'll wait and see what happens. I think it's going to remain range bound until 130, but we could see a bit of a change in direction once that Draghi press conference comes out, and the key levels certainly on the downside are 141.11 and 140.94. So watch out for that today. Lots going on today that could impact on trading, so just stay close to the news flow, and certainly trading could come a little bit more spicy this afternoon with the Draghi press conference. Okay, well, I'll speak to you later, and I wish you good luck for today. Thank you.